All right. Sorry if I just blew everybody's eardrums out with that music. I had the volume turned all the way up for some other project I was working on. So, good morning, everybody. How's everybody doing on this fantastic Sunday morning? We're going to take a look at some Bitcoin, a little bit of that, a couple other crypto assets, and also we're going to take a. Jay Bradley asked me to talk about market inefficiencies. I guess a couple people in the are ready to start learning about that stuff. So I will talk about it. In my opinion, the reason I don't explain it or teach it is because it's nothing that anyone needs to focus on. But I will explain it, what it is and what to look for if you decide that you want to somehow turn that into a profitable strategy. The strategy, all the things that I teach is like basically the most simplified version of technical analysis. This way, beginner people can just spend like a few months really studying the charts, listening to everything that I've said, and learn basically how to chart price action, right? That's the goal. But yeah, we will absolutely talk about it. First, right here, Bitcoin is struggling with that resistance from over there, right? 49,682. I had it on this bearish candle on the video that I uploaded yesterday. But as I was looking at price, it looked like this thing was closed above, but now it doesn't. So I guess that is still the objective level of resistance. You can see yesterday we just had a slight pullback day. This morning went up, took out the high of yesterday's candle, and now you're trading down looking for support. On the hourly, it does not look that fantastic. But with that being said, we've had bearish moves like this that absolutely got bought back up, right? This, though, is a fake out. Here is hourly resistance right there. That hourly candle, that marks the highest close on the hourly. That is your resistance. So you can see a test of it there and a failure. And then this break above, close above hourly resistance. And then 2 hours later, you took out the low of that breakout candle. This is not what you ever want to see, because what that signifies is this is a bull trap. Okay, so right now you're seeing a pullback in price. I did post on Twitter earlier this morning a chart on Bitcoin saying that if it doesn't break out by Tuesday, I'm going to get concerned. If I pull up the daily again, you can clearly see that we have been trading at this resistance level for 1, 2, 3, 4, 5, 6, 7, 8, 9. Today is day 10. Day 10, and you still have not been able to close a daily above that level. This stinks. You know what I mean? I don't like that. So by Tuesday, that gives Monday's fake out price action to happen, and Tuesday you get the real trend. So hopefully by Tuesday, this thing is breaking out, making new highs above this swing high here. I do have a price target if the breakout occurs at 52.5. 52.5. That's where I would suggest anybody take profits. Because that puts you real close to that 618 retracement level of the main decline that Bitcoin put in from here to the all-time high down to this low. That is your yearly open test. So this looks good, but if you look at this side, this doesn't look that good, right? There's your 618 test. So what I figure will happen if the bull or the sellers do come back into the market is if this thing pushes up and hits that target and then rejects from there, then we're going to probably see some more sell side, right? As long as you get a daily close above it and a strong daily close, like the next day you get a pullback down into like the 318 or the 30 whatever, the 328, the 382 retracement on the way up, and then go again, make a new high. That's what you want to see for bullish price action. You don't want to see one daily pop up there, close, and then the next day take out the low of that breakout candle. What you're seeing on the hourly. We don't want to see that on the daily, right? Something like this. Here's resistance here. Let me stretch this out so that way everybody can see what I'm talking about. Let's get rid of all the drawings so I can focus your attention on this over here. So this is resistance because it's the highest daily close in this sequence of price. So you can see how that acted as resistance. This pushed up into it, closed back below, pushed into it, closed below, pushed into it, closed below. Here is your breakout candle. Boom. Nice big strong break, nice close, and then this. That's what you don't want to see. Notice how this candle pushed all the way down, took out the low, and then closed back up here. This is a retest on a smaller time frame. Now, it just so happens that on this day, you traded up and took out the high of that daily. So that was specifically a stop run only, and this is bearish price action, right? This is when you're looking for sell side entries, targeting next area of support, which at that point in time would have been there, all right? So, Bitcoin, we want to see you break out, and we want to see you stay making new highs. We don't want to see you break out and then instantly close back below. So that's what we're going to be watching for on Bitcoin. There's another asset that I have been watching, waiting for a short, and that's on this asset right here. This morning I was thinking about taking that short on this hourly candle, but it was just too low and too close to support. So I did not enter this position, but I was looking for a test of this level here or this level. So this did not give us that test. We got that test here. So this candle right here, the 7 o'clock in the morning candle, that was your entry. That was the only entry. Okay, I mean, technically you could have entered on any of these wicks, but this was the trade. This one right here. This push up into this section, that's your entry. And then you would have been targeting our support, and you can see that you are just now about to get down there. So that's hourly support right there. Notice how this candle's pushing into it now. So that would have been the trade, at which point you could have taken 2/3 of your position off and moved your stop to break even and let the rest run if this thing comes off. All right. Last week I was looking for this to trade higher, and I got that. But the problem is I was not watching it yesterday. I was trying to go live at this time. I was not focused on this chart. I wish I would have been, because I would have thrown an entry on this up at $52. I would absolutely have entered that as a short, because this is what I wanted to see. I wanted to see price come back up into this retracement, right? This leg to the downside. I wanted to see a retracement back up into it for entry. Look at this, 618, boom, entry. So I missed it, right? But we're going to keep our eyes on it. And what I've been talking to in the Trade Talk Discord this morning is about the DXY, right? And the euro. So let's go back over here to the DXY, and then I'll start talking about market inefficiencies. So the DXY, we had news, right? The Fed's not going to do anything. Ed thinks that they're going to wait until the end of September to announce any big plans, which would be smart. We got we got non-farm payrolls coming up next Friday, or this Friday coming is going to be non-farm payrolls. So we get the jobs numbers, and they'll consider their data. So basically, there's 1 month left on the quarter that we're currently in. This is the quarterly chart. Here is the quarter that we are currently in. Right? We have made a high, and we have retraced from the high. So basically, if the Fed is going to announce that, then I would see dollar strength. If the Fed says that we are going to start tapering, I am looking for dollar strength. As long as the Fed is not going to taper, if they're going to keep their asset purchasing program going, then we are looking for weak dollar. So basically, I think the fate has been sealed on this quarter. So on this quarter, we are going to look for bearishness. And there is a nice trend we can get if it does become bearish. This is the thing also, right? You are in a bull trend currently, right? You're above the 50. You just got below the 50 on this close. So we have to give it a day or two to make sure that this isn't a fake out move to the downside. Because the market might know more stuff than we do. Right? The market is always right. I don't care about any other analysis, fundamental analysis. The market is always right. If the dollar catches a bid, then that means the market is focusing on something that the Fed hasn't talked about yet. So the thing is I was bullish on this asset until the Fed spoke Friday. This asset, I was bullish on it. I was looking at this as a pullback, and I was looking for long entries, meaning I was looking for short entries on the euro, which is why I took that short Friday, right? And it did work. I did take profits at support, but that 5-minute candle wrecked me, right? 10 minutes, 15 minutes before the Fed spoke, you seen bullishness come into the market like crazy. That tells me that something they already knew. They already knew. Let's go look at Friday's candle. So this was my short, right downside, down to support. Once we took out the low of day, I took off 2/3 of the position. We must start to break even. This 5-minute candle at 9:45 a.m. stopped me out right there, right? That's it. So, yep, this is what we're going to look for. We're going to watch one spot, 17715. I call that the Powell support. I just moved that weekly. That's okay. Let's just get rid of it. I'm going to call that Powell support. So basically, if you're awake during the London Open, watch this area. If you get a tag of this area at 3 o'clock in the morning, look to see if you start to get some continuation back to the upside. If you do, take that trade, put your stop under the swing low if that occurs. Because this might be the position for the rest of the quarter. Not for sure, I'm just saying, like, I would love to get an entry here. I might throw out a limit buy there and put my stop under this right here. The problem is that whole 5-minute candle can absolutely be the area. The whole thing. So, like if you take a box and wrap around the whole thing, something like that. So anywhere from this to here, how big is that? Is that bigger than 10 pips? It's right at about 9 pips. So you got a 9 pip zone right here where price can turn around. Yeah, so that's what we're going to watch. See if you get a pullback down into here. Boom, you want to see bullish continuation from that area. And if that happens, like I said, the fate is sealed on the dollar for the rest of the quarter because September is the end of the quarter. There's 1 month left on the quarter. 1 month left on the quarter. So you've already put in a low. This usually happens at the beginning of the first month for the new quarter, is you usually get your high or low put in. So this is why I'm still kind of hesitant about looking for bullish entries, because this can just be a pullback, right? You push down below support and you're pulling back, getting ready to make another rip to the downside. We've been trading inside of this range, this box area, for the entirety of this year. For the entirety of this year. Wait, no we haven't. There's July. Wait, what's going on? There we go. This is the yearly open here. So in this box for the entire year. So we need to get out of it, right? Figuring down to the downside or back to the upside. We will see. We shall see. All right, so that's basically it. I'll keep everybody posted as price action unwinds itself. So let's speak about inefficiencies in the market. What's going on, everybody? Good morning, good morning. So inefficiencies, what an inefficiency is it is a sharp repricing, okay? People look at this as going down and up. It's repricing. If it's going to the upside, then you're repricing back to the upside. If you're going to the downside, then the market's repricing. It's rebalancing. So if you get a sharp move and you take out a support zone, right? Let's use this one, for instance. This is the thing, though. The market's already traded from all the way down here, all the way to up here. So this whole range of price from this area to up here, right? This whole range, that's your quarterly range to the upside. That means if you look at these prices over here, it has already been traded through. So what an inefficiency is it's when a big breach of a big level, like a support level or a resistance level to the upside, when you get a massive drop like this and you don't go back and retest that level. All right, I've heard people call them inefficiencies. I've heard people call them fair value gaps. I've heard a lot of names for this. All right. The problem is all of this has already traded through this. So there technically is not an inefficiency there because price has already been there. The candles have already been there. You need a section on the chart where the candles have not been, where price has not been, for that inefficiency to even exist. So it has to be on a market with all-time highs or trading at all-time lows. Because anytime you come back down through here, this has already been traded through. So there technically cannot be an inefficiency there. So let's go and see if we can find one. Just bear with me, please, for a moment. All right. So generally what you're looking for is you're looking for wicks, right? So like from this wick to this wick, this one here, okay? So this is actually resistance, the bullish candle. Here's your breakout and close. So the inefficiency would be when this candle closes down to the wick, down to this wick high. That's your inefficiency right there. So let's go here and do this. Take that off. So now we're looking at the actual inefficiency. This is how inefficiencies actually work. So since price has never traded above 42.70 or whatever this high is, let's call it 42.66. Since price has never traded up there, the fact that it broke out above it and didn't come back down for a retest, let's get rid of this. Let's put a real line on there. Means that you can trade you can trade for the inefficiency fill, for the gap to be filled, even though this isn't a gap. From this close to this wick, this whole section right here is an inefficiency. All right, so let's see if we can go into a smaller time frame chart. Yes, we can. Perfect. So here's the inefficiency from here to there. But if you go into the smaller time frame, you will notice all these wicks. Wick, wick, wick down. So this wick down, it's very difficult for me to teach this. So this candle's your resistance level. Once this broke out, this one came back in for the retest, but it wasn't a deep enough retest to the inefficiency from at this point. Actually, it was. There's your wick high. There's your test of that wick. So on the hourly, the inefficiency's gone. It's already gone. This line is your inefficiency. So from here to the close is gone. This is why I don't try to teach them. Because yes, that inefficiency exists on a higher time frame. Not even on a 4-hour it's gone. Okay, so on the 8-hour, you still have an inefficient market, right? You still have an inefficiency because you traded up. But we know that on the smaller time frames, you do not. So what people would be doing is they would be looking for that to continue, right? They would look for that to continue. So let's go 1. This is going to probably not be the fill. What you're looking for is you're looking for price to trade down to this line on the bigger time frame to close that inefficiency gap or that fair value gap right there. That's what they're looking for. And there it is. Boom. Right? So you can either get into a new position when this occurs, or you can try to position yourself to trade to it and then exit your position. That's how you trade inefficiencies. But like I said, that inefficiency was gone completely on the hourly. But even the 8-hour, it wanted to close that gap. It wanted to fill that inefficiency from this wick to that wick. That is your inefficiency completed. All right. And then look what happens after. Boom. Right. So that's what an inefficiency is. It's difficult to get inefficiencies in FX because FX, let's go back to it, Euro USD. It's just what it is a lot of people, what they think is an inefficiency and they're calling it out in these chat rooms, they have no clue. They don't even understand what it is. Right. So an inefficiency would be anything up above 1.6 and down below this, because this is the entire life cycle of the asset. All right, so I can't go back in time long enough to see if this is an inefficiency, right? So, but still, how are you trading that? Are you looking to short it down into there to fill this? Because technically, unless on the smaller time frame charts, is something in here that closes that gap. But that's it. That's what an inefficiency is. So if they're looking for inefficiencies inside of a price range from high to low, technically the inefficiency is not even there. It's not even there. They're looking for something that does not exist because price has already traded through it. So let's try to find an inefficiency in this. So what they would be saying, what people would be looking for on this section of price, even though that it's already been traded through. So from down the year, these wicks down here, if this asset would have kept going, we would have been looking for a pullback up into there to fill that inefficiency. So basically, when I say break out above a resistance level, wait for the retest, that's your inefficiency being done right there. The act of the retest is the inefficiency fill. It always is. Always. So when we say breakout, breakout, retest, resume, that's what you're looking for. You're looking for the market to say, hey, we have traded above this level of resistance. We now want to go back to that level, see if there are any sellers below that. If there are no sellers below that inefficiency zone, then the buyers will pick price up and you will start to get your trend. You will start to get your move to the upside. So an inefficiency, trading to the inefficiency for the fill or looking to buy it is simply been simplified by saying wait for the break above the resistance level, allow price to go back to it, test it, prove it that it is going to be support, buy it, look for the rise in price. That's basically what we're doing, right? But we know that it's not an inefficiency. So an inefficiency in this section of price would be this whole daily candle, because you broke down below support, which would have been here, right? Now, if I pull this out here to this right there, it's not quite the close of that, but it's pretty close. So you traded back up to the body, the candle's body, the open on this day right here. See the little wick to the open? That's your short entry to the downside. It doesn't always work, because it can go higher. It can go all the way back up to this price here, because that is your Heath level. This is your supply. So price can technically trade all the way back up to there. So finding these entries in hindsight is so much easier than it is to find an entry while price is unfolding. I would not have taken that position, because that pullback from the time this thing closed to there is very minuscule, super tiny. There it is though. So now what you have is your inefficiency zone would be from this low, because price blasted through and you never came back and retested it. So once again, let's go and check and see if it did on the smaller time frame. But it's not an inefficient zone because price has already traded through it. But I'm just trying to make an example. Pretend this is all-time lows. This whole candle would absolutely be an inefficiency. So let's go down to the hourly, because what we're looking for, this is the trade that I took actually. Yes, that I did take that trade. Never mind. Sorry, I did take that trade. But anyways, so you did. Once you broke down, let me go back to the daily real quick, because so here, this bottom line, that's your inefficiency zone. Yep, no, here it is. So there's the test of it. There's your breakdown. This candle should have traded up into this candle, but it didn't. So this is your inefficiency gap here. But this is also, people are going to say, is an inefficiency gap from here to there, because price did not trade back to this wick low. There's your breakdown. So you should have came back up. The market should have came back up and tested that, but it did not. So from one spot 18192 to here would be a fair value gap or an inefficiency zone. So what you would be looking for is if price trades back up into this area, there's a Heath level there. So we would have been looking for failure there. If not, then you would have been looking to trade that to get that filled, just to get that bump, so that way you can close this gap of price right here, because this candle did not trade into it. This is your next candle. since your next candle just showed continuation with a slight close to the downside, and this one same thing, traded up only to this candle's high, closed lower. This is bearish price action in a nutshell. Never did it come back up and retest this. So this would have been the entry if it would have, but it didn't. So that's what people are talking about. Hello, everybody. Perry Long, BITF Long. Glad to be here. Could you look at a BTC on the weekly time frame, please? Yep. So, Pete, can you check a couple of cryptos for me? Yep. All right, good. All right, so hopefully that clears up what the inefficiencies are. But just remember, the simplified version of the strategy works better. You're not looking for inefficiencies. You're just simply looking for support and resistance levels to be retested upon resumption. All right, so let's look at Perry Long. What is Perry? Is it Perry Water? The water company? Perry on Network. I don't know what this is. Probably has something to do with mining or something. Yeah, you've got a breakout on your hands. There's resistance and you're closed above it. Right there. So you can see how price traded up to it. Boom, there's your break. So next level that you need to watch for possible test of, it's going to be 2158. This right here can be the level where price turns around. If you get a daily closure above 2158, you can look for that resistance to be tested at 2213. If you do reject here, then yeah, look for price to head back down and test that again, see if that wants to hold at 1987. So do not look for entries from here, because right there is a zone of resistance. Price can absolutely just blast through it. It's a daily level. It's highly unlikely that it does unless it's extremely strong, has a lot of bullish momentum. Price isn't, it's bullish. You are above your 50. This is a daily, so you can look for bullish entries, but you just need to look for entries closer to 1987 for the test of that level. All right. And then what was the other one? Let's see where the moving averages are real briefly. Yeah, you're bullish. You're above all your major moving averages, 20, 50, 100, 200. It's all below price. Price is bullish. Look for bullish entries. Why won't you go away? Thank you. And then BITF. Bit Farms. Another mining operation. Looks like it's holding support. This is support. We've already looked at this thing. I probably would have said something like, as long as you're not getting daily closures below $5.43, you can look for bullish entries. You did not get a daily close below that level. This does not count because it is a bullish candle and it opened lower than the support. Because on the stock market, they gap, right? There's no trading from 4 o'clock p.m. to 8 or 9:30 Eastern Standard Time. So there is pre and post market trading, but that's why you see this gap down. So that does not count as a breach of support. You never breached it. You did trade below it, but you did not close a daily below it. So yeah, that was a bullish entry. You could have entered on any one of these wicks. And your target is 626. That's the old resistance right there. But you've already traded above it, closed back below it. So I would stop looking at this over here and look for that level of support. This doesn't look that great, right? So this doesn't count either, as it opened that high. Look and see if price trades up to 639. Your Heath level is right there. That's your supply. Right there. So you can see a bullish move up to 677. But this could just be a bounce, right? Look at what price has done. There's your impulse leg to the downside. Here's a pullback. There's a push again. That's another failure. But if this price doesn't go up and take out this candle's high, then this could be a lower high getting ready to head lower. You got support down here at 461. That's demand. All right. So it's looking like so far 543 is holding us support. And Victor says FTT. Let's see. Is that a crypto? Wait a minute. I misjuiced. BTC dominance on a weekly time frame. Yeah, let's go look at it. Where is it? There it is. No, that's CME. Where's dominance? I seen that D and I thought that was dominance. There it is. That's what I'm looking for. Yeah, you've taken out support. You're about to close. You got 8 hours left on the close. You're trading. It's not trading. It's below support because alts are still pushing. Alts are still pushing. So if Bitcoin starts to sell off too, those strong alts can absolutely go crazy. It's trying to close. It's trying to get below support. Trying to get below support. So yeah, it's weak. Definitely weak. A lot of alts are still doing rapid things. F.D.A is green on the day. Look at this freaking thing, man. Boom. That's insane. I would have looked for that to get a pullback soon. AVX was doing the same thing. So on the weekly, it's not looking that good. But this can hold support here. Right? Here's a support test. Actually, a support break. But boom. Strong. Push back up. There's a check of it. The fact that we're checking it again, it can still hold. Right? It can still hold. They're testing the waters for buyers. Price is looking for buyers. This is also a sign of exhaustion. If it can't, it should have found buyers on this test. This thing should be rocking and rolling. Notice how over here you didn't even test. There is a slight inefficiency there. Here's a big inefficiency. Because, no, never mind. I was going to say because that's all-time highs, but it's not. Sorry, all-time highs is up here. Yeah, I mean, it don't even worry about the inefficiencies. Just keep it simple until you get it, till you see results like profitability. Once your equity curve turns around from going down to going up, it's going to happen. So yeah, dominance looks bad, juice. So alts can keep moving. Can you check a couple of cryptos? FTT and XVG. FTT. Yeah, it looks like Bitcoin is struggling at resistance. So does ETH. Here's your resistance level that it's struggling from. Let's see if this... No, it didn't. So this level did not hold as supply. But now you have a new level of resistance and it is holding. And you've taken out this to the downside. If you close below this, which is not a breakout, but it's your retest, right? You're not finding buyers above 51.47. It's not finding buyers. Prices attempted to test for buyers multiple times. It is not looking good. The shorts will start to look at this as failure and they will attack this asset. But you got support levels down below you. 3 different price points. 3 different places where you can possibly find support. So I wouldn't be wanting to short this asset. Mainly because you're probably still above the 50. Yeah, you are. So you're still bullish. But here are your support levels. You can see how they're so close. There they are. Boom, boom, boom. You lose this lowest one, and then you can look for price to test all the way back down to there. First there, 40.81, and then 37. If you lose that lowest one, that's the only place it can go. So there is multiple areas of support under it. If Bitcoin breaks out, a lot of these things are going to follow it. So if you're looking for bullish entries, these are the 3 places where I would look. You may not get back down there, though, because that's what I mean. Bitcoin's finding support in something like this. Because this has to be looked at as a bear trap. Because here's your break of support. and then you trade right back up above it. So you may not even trade back below this. There's just so much right in this area here that it's going to be difficult. It's got a lot of momentum coming into today. This is still early in the day, and you're already testing that zone. But it can absolutely turn around there, man. Jesus. I don't know if it's going to hold. That's a small bounce. Boom. And then you're right back at it. Looks like it's going to try to go lower. I'd probably leave it alone. If you get an hourly closure above this resistance level at 48.75, what I would then look for is a pullback into that area and then look for bullish entries, and I would put my stop very, very close because I don't want to test. I wouldn't even want to risk 1% on this because this is selling. Right? You had a bullish move to the upside and it got thwarted like instantly. Here is your dead cat bounce, and it got sold into. So sellers are gearing up on this. Be careful. And XVG. On the Nats. Don't want to look at it on the Nats. Let's look at it on Finex. Oh, that's disgusting. There is no liquidity in this. But that's calculated by TradingView, and when you do it on calculated by TradingView, for some reason they are so wiki. See, that clears it up. It's still got no liquidity in it. Like, this is a tick. That's just a tick. Like, for that whole entire hour, you had one fill. You had a tick. So there's not much liquidity in this. These are the things that you can get massive spikes. And you can see how the market makers dealing the range even. Because it's like this section of price, right? It's just you got a tick above it and then it instantly got sold off. And then your next open, there were no market makers on the bid at 30726924. They were up here. This was the next area. So this is a gap from 1 hour closed in 1 minute. You went from here to here because there's no liquidity from this close to that open. That's a big area for there not to be anybody. Just be careful when you trade these things, guys, because I'm telling you, massive selling comes into place. This thing is going to drop. Like, you can get slipped on that move. Absolutely. You can have a stop loss setting right there. And if there is no market maker at that price where your stop is, you will not get filled. It will fill you lower wherever the next bid and ask is. So just be very careful. This one doesn't look as good as the other crypto assets. I can tell you that. Right here is resistance. You did get a break above it, but you instantly sold off. See, like Bitcoin and Ethereum and the last thing we just looked at, they're all range bound at resistance, right under the resistance, which means it could be getting ready to break out, right? This has been sold off and it hasn't even come back to test resistance yet. Will it? I don't know. It doesn't have to. There's nothing inefficient about this at all. So yeah, it could keep going lower. Your resistance level is 29.06856. So on a daily push up into that level, it could be where you look to get short. Here's support. So you're trading above support. That's good. But look at the way the price is moving down. It's moving into the support. It's starting to find support, but your closes are getting lower. Here was the close, then there's the close. Where do we close now? If we close down next to that support level, it's probably going to break. Just follow the closes. If the closes are going higher, then price is moving up. If the closes are going lower, then price is moving down. Yeah, a long entry on XVG. So their support for now, 2.5, this level right here. You can see how we've tested this. Sorry, I forget mobile users. I'm so bad about that. So here you are. There is support. So this is a down move to the. This is a retest midpoint only continuation. This though looks good because what you would have normally wanted to see is just a test up to this wick or that open. Then you want to see it roll over, but it didn't. So you may be stopping here. Entry is going to be, I don't know if you're even going to get one. Let's go into the hourly. See if you're going to get one. So bad, though. I can't stand it. So you need an hourly closure above this. This hourly here. This is going to be your hourly supply. If you get an hourly close above that, up here somewhere, look for a pullback. Preferably down to this bearish candles open, and see if you get that rejection. You can throw a buy limit order there. This is not financial advice. If you take this position and lose money, it's solely on you. But I'm just trying to see, like, you can see that it's not trading fluidly. It's difficult. But that's what you got to watch. If it fails to close above this, then this thing's coming down for a test of support. So here's your impulse to the downside, here's your bounce. Impulse to the downside, here's your bounce. Impulse to the downside, you haven't even went back down there yet. So right now the sellers are in control. But if you do get a close above that, then that could mean that the buyers might be down there. I just don't like it. It's weak in comparison to other stuff. Let's see how big of a move it had from the lows. 125%. So to be fair, man, that was such a massive sell-off. 80%. Crazy. Cryptos are crazy. Yeah. And then Mimir says, if you take requests, could you do a look at BCH USD? I have an entry approximately 650 on the 20th. BCH, Bitcoin Cash, USD. Let's look at a Coinbase. And your entry is 650. But you're trading at 663. You entered pretty close to that white line. This is old, so never mind it. Let's just get rid of all those. It'd be quicker to do that and just put this one back up there. So resistance, lower close, lower low. Boom. This is a test to see if sellers are wanting to include this again. You've already got a breach below this support. So you do on the daily have a new trend to the downside. High to swing low. For bullish price action, you want to see that swing low be hit with a new high. What you got was a lower high, and then you took out resistance or support to the downside. So this is your lower high, lower low. Anything up to this level is a selling opportunity. Targeting. What, 584.78? Could I be wrong? Yes. Absolutely. Absolutely. Here's Heath level there. You want to see that get closed above today. So you're up in profit at 60 shit. Sorry. So if you have a position at 550, we're at 6, or you said 650. 663 is what we're trading at, so $13 in profit. I don't like to let green trades go red. Ever. I don't like it. So if that comes back down to your entry, you need to seriously think about probably closing the position. Now, that doesn't, I'm not a financial advisor, so I can't say, well, you should hold it, right? You should hold it. I can't say that. I wouldn't ever say that. If price goes back to your entry, there's a good chance you're wrong. So you just have to look at it like that. That's the way I look at it. So when I'm in a position, day trade or not, does not matter. The only time I will let price trade back to my entry after a couple days is if I've already taken profits on the initial position. If I have taken profits on the initial position, then I do not care if price trades back up to my entry, because I've already made a profitable trade. If you did not take profits and it gets back down to your entry, seriously think about closing the position. Let's look at it on an hourly. Hourly doesn't look too bad. This is strong right here. This is beautiful. So what it looks like to me is you probably, did you say when you bought it? You did not. So my estimate would probably be saying that you bought this last night when this happened. Like, you seen this and you were like, boom, buying. That's not the way to do it. But there's a midpoint in here that seems to be holding price. Let's see where or why. There it is. It's all the way over here. Well, that did not follow my hand. I wish it would have. Come on. There. So that was support till you got a breakdown, tested for resistance, and it held. Trade down, tested for resistance, and it held. Trade down. Boom. Breakout above what used to be resistance. Now you're checking it as support. You may be safe. Look at here also. You have already taken out the high of this candle. So your entry's down here. So you're still safe. Right? If you bought on this, you're still safe. Do not let that go back down there and stop you out. It should hold here. If it goes lower, then the sellers are tearing it apart. These big pops in price are bullish unless the sellers completely retrace the move. If the sellers retrace the move, then all this is a bull trap. It did exactly what it was trying to do. As long as it does not close below 657.72, you are good. If you get an hourly close below that, you need to seriously think about closing that position and looking to maybe enter lower at, like, say, 635 or 628. Something where you have a legitimate spot to put a stop under, like this swing low, for instance. But to be honest with you, I would not looking to be enter longs if this comes all the way back down, because you will literally have taken out that entire bullish move. So just keep that in mind, my friend. And right now it does look like it's trying to hold support, and that is bullish. It's bullish until it's retraced. As long as you can test the 618 of this bullish pop, right? Use your retracement tool. Go from low to high, because you're looking for bullish retracements. Bullish retracements are from low to high if you're new to fibs. Bearish retracements are from high to low, right? If you're looking for a bearish retracement, high to low, we're looking for bullish, so low to high. This is the 50% retracement of this bullish impulse leg to the upside. As long as you're setting here and not closing hourlies below it, you're good. You do have a 618, just $1 under your initial entry, $1 under. So if you want to set in pain and it's not a big position, you can wait for an hourly close below that to close if you want. Everybody has different risk tolerances. Like, I just exit it because the way I look at it is I can get another entry tomorrow or the next day or the next day. There's an entry every single day in all the markets we follow. Forex, stocks, crypto. There's opportunities every single day. This is why I don't FOMO ever, because I know, I've been doing it long enough to know that I'm going to get an entry tomorrow or the next day. I will get one But yeah, it looks okay. So let's move on. XVG, and then I just did BCH USD for me, Mar. I hope I'm pronouncing that correctly. Juice, if you follow Heath levels, you just take it as it comes. Your brain will thank you. Yeah, absolutely. What's up, Giles? Good morning, my friend. Hope you're having a fantastic weekend, Giles. Aaron C, thank you for being here, my bro. Better late than never. Absolutely. You guys don't have to watch it when I go live. You can catch the replay whenever you feel, whenever it's convenient for you. Thanks from Scotland. What's up, Victor? Scotland's in the house. My lineage is Scots-Irish. I don't know how I can be Scots-Irish. I'm not sure how that works, but it's probably not even true. It was on a website. All right. So Joe Grant, good morning. Could you please look at Cake USDT KuCoin? Appreciate you giving me the asset and the exchange. That makes it so much easier. Cake USDT if it's on KuCoin. KuCoin. It's weird looking on the hourly, but it's still okay. So, like, you can see the difference between an asset having liquidity and an asset not having liquidity. This one has more liquidity. It's not great, but it's more, right? You do have small gaps in between the hourlies, but it's okay. A lot of these things are very, very thinly traded. Here is the supply zone, aka Heath level there. Traded up to it, and that's what's holding price, 2670. 2670 is your resistance level. Need a daily close above it. And here is your support. So right now you are almost dead center of the range. There is a support zone there because all bearish closes on daily charts are support levels. All of them. And all bullish closes are resistance levels. All of them. You don't have to mark up all of them though, right? You mark the one that hasn't been closed above, and then when you get the close above, you give it time. There's a check of support here. That's your buying opportunity. You got your breakout above resistance, then it pulled back into support. That's your entry. Boom, to the upside. You're looking for something similar here. See if it holds at 2484. But this is the thing. We're seeing bearish momentum. Not really on this one though. That's like a slide instead of a push lower. It's like a slide lower. So you might see a bounce out of here. The speed of the aggregation shows you how bearish or bullish something is, right? If it's aggregating completely quick to the upside, then it's bullish. If it's aggregating very fast to the downside like this is quick aggregation to the upside and to the downside. This is more or less consolidation, right? Just going through the motions. So yeah, that's the level to watch, 2484. And you can watch it on a higher time frame, like an hour, 4 hour. So you got 4 hour ETH level right there. See how that lines up beautifully with that daily confluence. You get a 4 hour closure below 2484. You're not looking for bullish entries. See, did you see what Bitcoin did? How Bitcoin made that support on the 4 hour down here? Never closed below. Never closed below. Never closed below. This, once you get a close above this bullish candle, that shows you that there is strength. You can look for entries. And look here, you traded all the way almost back down to that level. That's your entry. That's what you're looking for. I do not see that on Cake. So watch it. Make sure it holds. Make sure you don't get a 4 hour closure below that level. I'll go right back to it real quick because I don't remember what the level was. The price is 2484. Do not get a 4 hour closure below that. If you get like 3-4 hour candles and not being able to close, you're probably going to be looking for a bullish entry at some point. That's the way to test support and hold. So hopefully that helps, my friend. And on Binance for longer term, you said. It looks exactly the same. Let's go look at the weekly. You specifically said longer term. So, man, that's ugly chart. Here is a 2 week Heath level. That's the same thing that Bitcoin's fighting in right now also. But you're not even there. You're not even there. So 3018 would be the area at which I would be taking profits if you do get a bullish entry. This is a blow off top. It is a blow off top. Yes, you traded at support for 5 or 6 weeks. This is going to be a selling opportunity on this asset more than likely. Up here, if it gets up there. It needs a 2 week closure above 3018 to continue its bullish price action. But 2 weeks is a long time to wait. There's your monthly. Man, that's bad. Boom, boom. 2 months to the upside. Boom, boom. Right back down to craziness. So this is probably going to be looked at as a selling opportunity. Where's your fibs? Your fibs are way above you, though. Way above you. Right here's the 50%, 618. 3105 and 2696. Possible areas of resistance. Hopefully that helps. Oh, you bought it on the 20th. Okay. Well, hopefully you took profits, my friend. Mimir, hopefully you took profits. Scotsman probably took pity on an Irish woman and had a baby boy. Oh, come on, Juice. I guess that's what happened. Juice says that's what happened, so that's what happened. All right, so here, let me go back over here to Bitcoin real quick to show you the 2 week chart. Right there. So you're trading into it. You traded up above it. But you got 8 hours left on this close. This will look good to sellers if it closes below. Right? Bitcoin didn't look like a blow off top on the daily, but when you get out in the higher time frames, it doesn't look good to me. I mean, it might look okay to some people. And here's another thing. You got a break of support, but since you took out the high of it on the very next session, it's a bear trap. But it doesn't mean it's going to continue to go up. It just means that the bear trap was initiated and the bear trap's already been played out. But you did get continuation and follow through. So you're bullish. A close here. As long as you don't close below the open, you're going to close green. So I wouldn't be looking to take shorts solely on this chart. Because the next 2 week session can do the same thing. Trade up and then close below it a little bit. So you could trade up here for a whole month. People are rushing. They're always in such a hurry to get in a position. And you don't have to be. Now, if you see a lot of bearishness come out of this area, like in the next couple days, then you're going to be looking for shorts. You're going to be targeting support at 44.5 and then the next one down there. But that's neither here nor there because it is closing candles above support and it is basing at resistance. So Bitcoin is a tide that raises all boats. If this thing breaks out, a lot of your crypto assets are going to follow suit. They're going to be right behind it. Let's look at ETH. Yeah, same thing. ETH's been consolidating up here for a long time. This looks more like accumulation than it does distribution. The Bitcoin chart looked like distribution on the daily because you were getting insignificant highs. It's Wyckoff or 3-drive topping formation is distribution. Sellers are selling into the new highs until you exhaust the buyers. Boom. So basically you're doing the same thing. It's always a supply and demand game. The sellers are trying to exhaust the buyers and the buyers are trying to exhaust the sellers because whichever one does, that's the way price will go. long we been going? Oh, an hour. So I'll wait a minute for you guys to give me any more questions if you got them. Let's look at Solana. Solana has just absolutely been on a tear. It still looks good. This is a pullback on the daily. It's nothing to be concerned about. Would I be looking for new entries? No. It's just, man, you're going to see this thing come off hard soon. I would not be surprised to see this thing go up to $100 and then just cave in. Exhausting the buyers. I'm already looking for shorts on AVAX. Unless it holds support, then I won't. Because the next resistance level is up there at $55. But this does look like a impulse or a retrace from a bearish leg. But need a closure back below this to verify that. Because this is a strong candle. That's Friday's price action. Thanks to the Fed, a lot of these risk assets got to bounce. So risk is on. Risk is on. This is why I'm not looking to take a short until I get verification that the sellers are in control. This thing is still at overbought regions. And then where's Mr. Luna at? That was a fantastic trade I took on this thing. But I am no longer in it. And that's sad because it's already went up to $36. Craziness. These things can make you or break you, man. Make you or break you. So freaking strong. KCS USDT. Yeah, let's go look at it. On the KuCoin. It's trading range bound. It's trying to do the same thing. It's trying to break out. It's looking for buyers. You got multiple resistance levels above you. This is the near term one that's holding down price because you haven't been able to close a daily above it. And then that's support right there. Let's get rid of these. So this is your price range, $11 to $13. You had to check a support. That's also a daily Heath level. And yeah, this is probably a pullback. It looks like it's wanting to break out like Bitcoin and everything else. I don't pay too much attention to weekend price action unless something's extremely bearish or extremely bullish. What we're seeing is simply not either one of those things. This is range-bound price action. It looks like it's being accumulated. Like the hourly is making lower highs, but you did not make a lower low. There's the low. And it's right back up into this. Of course, sellers took a position there because that's an hourly supply zone right there. Yeah, it looks like it's probably going to break. That's what it looks like to me. Whether it does or not are two different things. But Bitcoin looks like it's trying to make a break to the upside. If it doesn't do it by Tuesday, I'm going to get concerned. And I will probably be looking for short side entries on some of these high flyers. Because if Bitcoin comes off, they will too. And they will be the best ones to short because they've had such a good run. Am I in USDT? Yeah, let's go look at it. Maybe I'm wrong. I think you missed my second question above. Alright, I'll go back and look for it. I'm looking for this real quick. MIN USD. Oh, get rid of the T. MIN USD. Is that an L? That's probably an L. Let's try an L. There it is. Big strong break. massive wicks. Is this a new asset? It's new on Coinbase. Is it new on Binance or Finex? No, it is not. Melon dollar. Look at these dailies. Oh my gosh, that thing has no liquidity in it back there. It's got a lot of liquidity, or more liquidity in it now because of this monstrosity price action. Look at this big, strong move to the upside and always retraced. Probably going to see the same thing. Right? But it's moving. Definitely got some movement in there. Like that's $128 to $116. So $20 drop is a lot, especially if you're levered up. Like the 5x, this thing will hurt you in a second with a lot of leverage. I don't really have an opinion on it, man, because every time it gets a bounce, every time it gets a pop, it gets sold. Pop, sold, pop, sold, pop. Probably gonna get sold. It just doesn't have very much liquidity in it. Look over here. Like, look at these dailies. Ticks, tick, 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 tick. This just got a bounce. You can see how the liquidity starts to come into it. The higher it goes, the more liquidity comes because the candles are bigger. And then down here, a lot of liquidity. More liquidity. Bounce, sold into. So just be careful. These are massive moves. So this took like 3 weeks to happen. And you moved 300%. So 100% per week. Jeez, man. Massive moves. Be very careful. Support, old resistance. That's the only thing I can see right here. 106.74. You don't want to see a daily closure below that. If you do get a push down to there and then holds, maybe you can get lucky and get 100% bounce out of it. This thing's moving crazy. And then let me go back up and see where I missed Victor's second question. Okay, there it is. Heath, are you thinking about guarding your wealth amidst inflation concerns and overall grim macro outlook, thinking 2-3 years out? Not really. I'm not really concerned because, like, if the Fed's propping up the markets and we get massive amounts of selling pressure coming in, then something's wrong, and then yes, I will get concerned. I will take all the risk out of the market, right? All of it. As far as hedging my dollars, like what I own, my wealth, I mean, you can do that with a lot of different things. You can do it with property. You can do it with gold bars, silver. Those are things that are generally always going to have some kind of value. Even if the dollar plummets to the face of the planet. If it goes all the way back down to zero, it's not more than likely going to happen in our lifetime. It can, but that is like, you're basically thinking of something like a red herring event, something that is very unlikely to happen. Because, like, think about this as well. If the dollar was weak when the U.S. shut down during COVID, and like they could have ran that as an experiment. I am not saying that it is or was an experiment. God no, a lot of people lost their lives. What I'm trying to say is it was like an experiment because they were physically able to shut the whole economy down for weeks and then roll it right back up again. At that point, if the dollar was weak, you would have seen it continue to continuously fall. So for now, you can hedge against those things. You can hedge against inflation. You can buy Bitcoin. You can buy gold, silver. If you have enough money, I wouldn't tell you to buy property right now because houses are at an all-time high. The housing market's just, it's at the highs. So literally, if you buy anything now, you're buying it at the highs. But it's one of the things that very seldom goes down. Hopefully they fixed the subprime mortgage problem back in 2008 that caused the shock to the system. It looks like they got a handle on it. So, I mean, I wouldn't be too concerned about it. Not right now. Right now, it's risk on. The Fed said they're going to continue to inject stimulus. They're going to continue their asset purchases. Markets are probably going to continue to go up. So just, yeah, Not right now. If I start to get concerned, I will let you know. Right? But not right now. I think it's going to be an opportunity. See, where other people see it as a concern, I see it as an opportunity. If all the risk markets start to collapse, I'm going to short it into existence. I'll just make money on the collapse. That's what smart people do. They make money when the market's going up. They make money when the market's going down. So there's always going to be the dollar. At least, I don't know. I can't see it crashing. It's been going for so long. So long. Everything's situated. But yeah, I mean, it people are talking about it. Fed's trying to maintain 2%. So we'll see. We shall see. Just buy some gold. Not paper gold. Buy actual physical gold. Something that you can physically trade for food. If that ever were to happen. I mean, you're talking about doomsday type stuff. Build a bunker. Stock it full of canned goods. Because that's what you would have to do. Because if money becomes useless, it doesn't matter what you have. The world is done. It's done. It's going to be wars and I don't even want to think about it. Don't even want to think about it. That's craziness. That's another reason why I'm not too concerned about Bitcoin being the world reserve currency. It's not. The dollar is. The dollar will always be. The government will try to do everything they can. They'll fight a war to make it happen. ETH it's an ETH token. It says, okay, MLN is. Yeah, it's moving quick, making a lot of moves. I'm quite surprised about liquidity in it. Yeah. If you had to pick between a mediocre altcoin or penny stocks, I'll trade penny stocks, but I don't buy them, right? I don't keep them. I'll take them. Like if I'm looking at my gappers list in the morning, I look at the gapper list every single morning at 8:30. I'm looking to see what's or 9 o'clock. The list populates at 9 o'clock in the morning, right? You see what's gapping on the penny stock horizon. If anything is gapping up like 60 to 50%, you can watch it at the pre-market or at the open. If you see a big rise in price, like at the pre-market, and it's already moved like a couple 100% and been sold off, don't even worry about looking for bullish entries on that asset because chances are you're going to get a pop and it's going to be sold into. As far as for long-term hodls, I treat them both the same, right? Penny stocks or crap coins that I don't even know what they are or heard about. These NFTs, all this thing, like I don't know anything about it. I got enough stuff to trade, so I haven't really paid any attention to it. But something like Doge, that's absolutely worthless, has got value right now. As long as people are willing to buy it, then it has physical value, right? Physical value is in the fact that it's trading at 27 cents. Before the bull market cycle started, this thing was trading at 0.002. That's like 2,000ths or hundredths of a penny. This thing had more of a bull market than anything. Like this thing went up thousands and thousands of percents. 2,769%. Like that's turn $100 into $1,000 type stuff. $100 into $10,000 type of stuff there. I think, in my opinion, I think this was a massive bull market. All right, let's go find Doge. So this was the bull market of 2017, and it barely made it up to a penny. Almost hit 2 cents in 2017's bull market. This year, it hit 75 cents almost. This is going to probably be the end of the run for these. That is such a big move. It's probably going to go back down. If Bitcoin starts its bear market phase, this thing is going to get crushed. And so are all of these. Because if you can remember before 2021 happened, right? This bull market, Everybody was doing the same thing. Oh, mid-cycle shakeout, or this is just a mid-cycle. It's going to find support and it's going to go. And it did. It found support there. And then there's your boom. There's your break of support. And then you found support again. There's your break of support. So any bullish pop was a selling opportunity. And that's what it'll be like again. Is it now? Well, you haven't even closed the 3 month. You haven't even closed a bearish candle yet on the quarter. So find one that is. No. Oh, now you're working on one on Doge BTC, but that's different. See, ETH. No. Still green on the quarter. Link, green on the quarter. Luna. Link, XBT, red on the corner. Luna, very green on the quarter. NOIA, USDT, green on the quarter. And the list goes on and on and on and on and on and on. But there will be shorting opportunities soon, more than likely. That's just my opinion and my speculation. I have no clue. I cannot predict the markets. Litecoin is weak. Look at, this is its 2017 cycle. 2018. You didn't even make new all-time highs on Litecoin. Why not? Everything was so bullish. Not this. This might be my favorite to short, actually. Massive blow off top. Boom. And you're just been trading in a range, looking for buyers. You're not going to find them. It's probably not going to find them. $174. Where is the low of the last market phase? Down here. So if it's going to be continued, if it's going to stay bullish, then it should never see $21 again. That's what a lot of people think on Bitcoin. Like, they think Bitcoin's never going to see 20K again. Because Bitcoin in its past has made, it's continually to make new floors. So you make a new all-time high during the bear market phase. You make a new floor, but it's not even close to the old all-time high. So some people are looking for 30, where we just hit the yearly lows as the low. You're not going to go back down there. Well, we shall see. I think, in my opinion, my humble opinion, is that there's better assets out there, right? If you're looking for 2-3x gains, it's probably not going to be on Bitcoin. Bitcoin has to go to 150K just to be a 3x. 150K. And that doubles your money. If you buy Bitcoin at 50K, you will double your money if it hits 100K. It just seems so out of range, or so out of touch to me. It just, but Bitcoin's different. It's different. That's all I can say about it. And someone said XTZ's flying today, so there it is. Tezos absolutely rocking and rolling. It's still below its all-time high, though. Dude, I can remember trading this thing when it was cheap. Cheap. And what's the other one that I used to trade? It was like 20 cents. I don't know. I guess I don't have it anymore. But I was trading it on Coinbase, ZRX. Yeah, it was this one. ZRX. I was trading this at 20 cents. 28 cents. If I'd have known what I know now, man, I would have loaded the boat on that. So from 20 to 40 cents is a double your money. 40 cents to 80 cents, that's a double your money. This thing doubled your money several times at 20 cents. But it's back down to 33 cents. Or it was, sorry. It's at $1.08. So what does it do if I just bring the price over there? Yeah, that's what it is. Okay. It's at $1. This thing went all the way to freaking $2.50. That's a 10x almost. So yeah, there's probably a cryptocurrency out there that's going to have a 10x. Finding it is difficult. I don't think Bitcoin's going to have a 10x from where it currently is. That's $1 million almost. It's just, if you trade the technical levels, just keep trading the technical levels, take profits. If you're going to enter these positions, don't enter them with a lot of money, right? This style of trading isn't going to get you rich, and if you get a massive explosion to the upside on something like that, then it will, right? You can absolutely make a ton of money if you catch one low and cheap, and that's what a lot of people are doing. But you have to understand, if it's trading like straight down, what are the chances of that doing it? It's hard to say. But there's a lot of them out there. I just don't know what they are. If you have time, what do you think about audio USDT? I was looking at this the other day, actually, because I had never heard of it before. I was absolutely looking at it. Would you say it was USDT? It's on Binance. Yeah, I can't remember why. I think someone asked to see it, but it had a strong bullish move, and it checked that support, which was the 50% retracement of this bullish candle at 224. So it's still roughly half off, because it traded all the way to $5. Yeah, this was another one that had a 10x. That's insane. Just load the boat on these cryptos if they get a bear market. If the bear market comes in, just start buying them up with money you don't care to lose and just hold them for the next bullish phase, I guess. 4-year cycles if it's going to continue. It looks good for now. There's your support test. You took out the high of your support break. So this right here, once you need this to hold support at above this bearish candle, the opening price of it, you can see how it's testing it and it's trying to find support. You already had a bounce from there and you're back down, so it's probably going to lose support. There's another hourly support at 2.69. 269. See if it holds there. If you lose that, then you will have almost completely retraced the bullish move, which means it could have been a selling opportunity. ETH BTC. I haven't looked at this in a long time. It still hasn't came back down to 50 yet. I was looking for it to come down to 50 to buy it. It never came back. Made me so mad because I was trading it on this day. I was trying to find support at the low and it just stopped me out, and then the next day it took off. I was so upset because I was levered up. I had a big position on that. Massive position. That would have paid, but it didn't. But it's just trading in this range. It's inside of all of this. So for your impulse leg to the downside is what you're stuck in. It cannot break out of it. It's just range bound. So from the high to the swing low, you're trading at the 382. It looks like it's trying to regain bullishness. It's at daily support right now. If you're looking to pick some of it up, stop under this swing low. Don't pick it up with a lot of money, because what you would need to happen is Ethereum to be strong and Bitcoin to be weak for this thing to gain value. This is a daily. So you notice how it's been staying at support and the highs are getting lower. This is probably going to break. Yeah, in order for it to be a bullish pattern, you gotta break out. So like, people are gonna look at this as a bullish pattern, and a descending wedge typically is a bullish pattern. So support is 65,672 Satoshis. As long as you're not closing below this, you could probably see this thing catch some strength. This is support, and it's from this bearish close here. So, yeah, you get a daily close below that, then you're going to look lower. Probably down to this swing high. You see how this bearish candle tested that? Traded all the way back down into that swing high. So if you lose the current support, this is the next one. Here, traded down to it. You got bullish, boom, bounce. So the days are getting smaller and the highs are getting lower. So if it does break, I would look for 6,400 or 64,000. Sorry, 64,000 satoshis. But if you get a breakout above this and a close above this kind of swing here, this trend line, then you can see it go back up to roughly there. Or first, the daily resistance is going to be 68,117, and then your daily Heath level or supply zone at 69,331. 69,331. It's range bound, so it might be safe to pick some of it up. It looks to me like it's trying to break down, but it needs to do it in the next day or two, or you're probably going to see it go up. Which one do I think long-term winner? ETH BTC, which one do I think is a long-term winner? I'm not sure what you're asking. Which one do I think is a long-term winner? Which one? You mean Ethereum or Bitcoin? I'm Bitcoin all the way. I think Ethereum relies too much on other things for it to stay alive. For instance, like right now, I was reading one article where he wants to turn every person that's involved in Ethereum's cell phone into like a miner, essentially. That's never going to happen. And if that's what you need to happen for your business to grow, probably not. Bitcoin's going to be the biggest of all time forever, unless something else is better that comes out. And I don't think it's going to be a platform, because platforms can fail. All right, it has to be something else. It has to be something else that people are willing to see, hold their value, their money in it. That's why Bitcoin is so good. It's had a 200% annual return on investors' money since it first began. Not every year, but annualized. That's on the average. It's had a 200% growth year over year. That's doubling your money every single year. No other asset can do that. So I think Bitcoin's always going to be the king, in my opinion. It's always going to be stronger and better than all these other things. These other things have different use cases. They're different. Bitcoin is more of a store of value. So it's more like gold. And this is like Facebook. Ethereum is like Facebook. I don't know. I'm not the technical guy on it, man. I'm a technical analyst, but I don't know like each of the crypto world. I don't know each of the companies, what they offer, what they're looking for, what their objectives are. Are they achieving it? Yada yada. But it doesn't even have to be like, it's, if Bitcoin goes up, they all go up, even if they're crap, even if they have no use case, even if, right? It's a completely different thing. Right now, people are spending $65,000 on stickers that you can copy from your computer on the NFT market. Logan Paul spent, what, a couple $100,000 on a nothing? Okay. If people are willing to give it value, it's gonna have value. It doesn't matter what it does. Doge has no use case. Nothing. But since Elon likes it, it's holding its price at 20 cents. It's insane. Oh wait, which one? Okay, yeah. I like Bitcoin better forever. Like I have more of my holdings in Bitcoin. It's like 75% Bitcoin, 25% ETH. I went up after TikTok announced cooperation with audio. Gotcha. It went up after TikTok announced a cooperation with it. Yeah, that'll do it. Absolutely. What is your take on the current state of the crypto market? I was hoping for a dip around 49. Bitcoin down to 49? Yeah. I don't know if you're going to get that. Well, you're already at 49. I'm not sure what you're asking me. The whole crypto market is Bitcoin. It's at 48K right now. If you're looking to buy it, it's in the resistance. So, like here, what's another one that's a platform? Like Ethereum. Is it Polkadot? Cardano? Like, I read an article where someone thinks Cardano is going to be trading at $100. If that's true, then look at where it's at, $2.86. $100, that's a huge return on investment. So if you're looking for it as an investor, then the way you have to look at it is, am I willing to risk, say, $5,000 to buy F.D.A. at $2 because I think it's going to be trading at $10 5 years from now, 10 years from now? And if so, well, if that happens, you just made a nice chunk of money on a $5,000 investment. That's how investment works. It's about risk. If you want to wait for it to get lower, like the bear market phase, if Bitcoin starts the bear market phase, absolutely, I'm going to be buying it hand over fist. Not Cardano, but Bitcoin, hand over fist. I will buy it until it goes to zero. I will always buy it. The lower, the better. The lower it gets, the more I'll buy. So if we do have another bear market, I'm going to look to buy Cardano, more Ethereum. I want to get more, because right now all I hold long term is Ethereum and Bitcoin, and I think I have like $200 in Litecoin or something, and something very small. So it's like I don't even care about it. It's not an investment. Oh, I just hit the mic, sorry. But I think F.D.A. is going to have a good run, but I definitely don't want to buy it at all-time highs, because if Bitcoin has a bear market, this will too, and it's already up hundreds and hundreds of percents from where it was trading just this year, right? Just this year, January, February, you hit lows of 17 cents. So I don't want to sink a bunch of money into it at all-time highs, because if it does go back down to those levels, you're going to lose your entire investment. So start to look to put investment funds into these things around like half off, 50% areas. Buy a little bit at 50%. If it goes lower to 80%, buy a little more. If it goes to 90%, buy a little more. And then you'll have a nice chunk of money in it, and you just hope it doesn't go to zero at that point. That's the only way you can do like a long-term investment. If you're trading intraday and you're using a lot of leverage, then you don't want to do it like that. You'll get slaughtered. Trading is different. But there's just nothing to do on a lot of them, right? We got to wait for Bitcoin to break out. This thing's at all-time highs. Luna, Solana, there's nothing to do. AVX, I think, is setting up, but we shall see. If it holds support here, it will not be a short. And I'm not looking for it to short it back down to zero. I just am looking for a short opportunity if it comes off. If it continues to go up, I'm not looking to short it because it can still run. But I think this one is one of my favorites for a position soon. Luna and Solana, the high flyers, they're going to look very, very attractive if Bitcoin fails. But it has to do it first. All right, guys, I'm going to have to go ahead and shut it down. We've been on for an hour and 30 minutes, and I try to keep them around that long because I know it's difficult for people to watch them when they're an hour and a half long. But, yeah, I am going to do my best to go live this evening at 5 for the Forex Weekly Outlook at the Forex Market Open. We do have some things to talk about when it comes to the dollar and stuff like that. Thank you guys for being here. Make sure you trade safe, trade smart, and happy trading, everybody. If you have any questions, just drop them in the comment section as always, and I will always answer any questions you guys have, especially you guys. Have a fantastic rest of your weekend.